Okay, I hope I'm audible to all students who are attending this lecture of class 12th economics. We continue with our lectures on national income. We continue with our lectures on national income. This is the main topic for these set of lectures. And within this topic, we plan to start with the second chapter within this unit, which is circular flow of income. If you all can recall, in the previous lecture of national income, we had done chapter 1, which was introduction to macroeconomics. Okay, this is the second chapter within the national income unit, which is called the circular flow of income. So let's look at the circular flow of income in a two-sector economy. Let us look at the circular flow of income in a two-sector economy. Okay, so first of all, what are these two sectors? These two sectors are nothing but the firms. Firms are the producer of goods and services. And then we have households, which are the consumers of goods and services. Similarly, I can look at it from another point of view. Firms demand land, labor, capital, entrepreneur. Households will supply land, labor, capital, and entrepreneur, which are called the factors of production. Okay, so we can write all economic activities are interrelated. All economic activities are interrelated, and a pictorial illustration of the interdependence between the major sectors of the economy, the economic activity is called the circular flow of income and product. It is called the circular flow of income and product. Product means output. Okay, so let me quickly revise with all the students. Since all economic activities are interrelated, we know that firms are dependent on households for factors of production like land, labor, capital, entrepreneur. Households are dependent on firms for consuming goods and services which are produced by the firms. So when we are studying the interdependence between the households and the firms through a diagram, this is called the circular flow of income and product. Okay, so we know that goods and services flow in one direction. Goods and services flow in one direction, and money flows in the opposite direction. Okay, so this causes a circular flow. You can clearly see goods and services flow from the firms to the households. Money flows from the households to the firms. Okay, very simple. Similarly, you can see that the other case also happens. Households are also receiving money from the firms because firms pay the factors of production. The firms pay rent to land, okay, wages to labor, interest to capital, and profits to entrepreneur. So soon I will be drawing a diagram where students will learn that there is a continuous flow of goods and services in one direction, and the money flow is happening in the opposite direction, which is causing a circular flow. Okay, so we can write, let's write this. So we have, within the circular flow, we have the real flow. Now, what is the real flow? Let's look at the real flow. Okay, let's analyze what is meant by real flow. So the flow of factor services, the flow of factor services, goods and services, the flow of factor services, goods and services in the circular flow of income, in the circular flow of income from one sector to another, from one sector to another, is called the real flow, is called the real flow. Okay, so clearly factor services flow from, clearly the factor services flow from the households to the firms. Factor services flow from households to firms. How? You can clearly see that firms provide the, you can clearly see that households provide the firms with land, labor, capital, and entrepreneur. So factor services are flowing from households to firms. Okay, and goods and services flow from firms to households. Goods and services flow from the firms to the households. So students, this is called the real flow. When I talk about real flow, no money is involved. When I talk about real flow, households are providing land, labor, capital, and entrepreneurship skills to the firms. Firms are producing goods and services and providing it to the households. This is simply called the real flow. You can clearly see that real flow only involves flow of goods. No money is involved here. And similarly, I can write the money flow. So erasing all this off, we now have the money flow. So all the payments to the factors of production, all the payments to the factors of production made by the firms to the households, all payments to the factors of production made by the firms to the households. Example, rent to land, wages paid to labor, wages paid to labor, interest paid to capital, and profits paid to the entrepreneur. All payments to the factors of production made by the firms to the households, and all payments made by the households, all payments made by the households to the firms for consumption expenditure, for consumption expenditure constitute the money flow in the circular flow of income. They constitute the money flow in the circular flow of income. So quickly revising it with all the students, you can see that households are providing factors of production to the firms, and firms are paying rent to the land provided by the households, wages to labor provided by the households, interest to capital which is provided by the households, and profit to the entrepreneurship skills which are again provided by the households. So firms are making these payments to the households. Now these payments are in money terms, so it's a part of the money flow. Similarly, guys, households are buying goods and services from the firms, and households are making payments for those goods and services, which is called as consumption expenditure. Households are buying what? Households are buying goods and services from the firms, and they are paying the firms for those goods and services. Again, money is involved here. So both these constitute the money flow in the circular flow of income. So I hope students have understood the real flow and the money flow. Once I draw the diagram, all this will become even more clear. Okay, so now we can quickly go through assumptions. So when we are studying this model of circular flow of income, so assumptions regarding the circular flow of income. Assumptions regarding the circular flow of income in a two-sector economy. In a two-sector economy. So in our course right now, we only have the two-sector economy, and we look at the following assumptions which are made in the circular flow of income model within the two-sector economy. So the first assumption, there are only two sectors in the economy. There are only two sectors in the economy, that is the firms and the households. There are only two sectors in the economy, which are the firms and the households. Second assumption, households are the owners of the factors of production. Households are the owners of the factors of production. That is, what are the factors of production, guys? They are land, labor, capital, and entrepreneurship. We have done this in our microeconomics course. The factors of production in the economy are land, labor, capital, and entrepreneurship. And who owns them? The household owns them. Household owns a given piece of land. Households own labor. They supply labor. Households own capital, and households have entrepreneurship skills. They provide these factor services to the firms. They provide, or I can say supply, these factor services to the firms. These factor services to the firms. Okay, then we have the third assumption. So the third assumption you can see on your screens, firms hire these factor services, which are land, labor, capital, and entrepreneur, Firms hired these factor services from the households, and in return, firms pay rent to land, wages to labor. Firms pay rent to land, wages to labor, interest to capital, and profits to entrepreneur. Profits to the entrepreneur. Okay. Fourth assumption within the two sector economy, households spend all their income, households spend all their income on buying goods and services, on buying the goods and services produced by the firms. They do not save income or pay taxes. Also, there is no export or import of goods. There is no export or import of goods. So students, in the two sector economy, there is no government. We only have the firms and we only have the households. Now, since there is no government, there is no point of having taxes, because taxes are paid by the firms or the households to the government. But since we are assuming that right now it's a two sector economy, there is no government. So clearly the households do not pay taxes. Households will consume all their income. That means when we are doing the two sector economy, the assumption is that the households are not saving any penny. Whatever they are earning, they are spending all the money on buying goods and services from the firms. Also, we assume that in the two sector economy, there is no rest of the world. Within the economy, you only have the firms and the households. Since there is no rest of the world, there is no export or import of goods happening. Okay, so I can, to make it clear, I can write. So first of all, let me discuss quickly with all students these four assumptions. These are the assumptions regarding the circular flow of income in a two sector economy. We assume that there are only two sectors, firms and the households. Households own the factors of production, which are land, labor, capital, and entrepreneur, and households will supply these factor services to the firms. Firms will use these factor services to produce goods and services, and these goods and services will ultimately be bought by the households only. Firms will hire these factor services from the households, and firms will pay rent to the land, wages to labor, interest to capital, and profits to the entrepreneur. Okay, when firms will hire these factor services, firms will produce goods and services. Households will spend all their income on buying the goods and services which are produced by the firms. Households will not save any penny. That means if you are earning $100, you will spend all those $100 in buying goods and services. You will not save any penny. Second thing, that since there is no government, no point of taxes, and since there is no rest of the world, no export happening, no import of goods happening. So I hope students are clear with these fourth assumptions. Then just for more clarity, I can write the fifth assumption, that sell firms sell all that is produced to the households. Firms sell all that is produced to the households. Now, what does this mean? This means firms are not keeping any output with themselves. Whatever output is produced by the firms is all sold to the households. Okay, and the sixth assumption is there is no government, or rest of the world. So these are my 6 assumptions made for studying the circular flow of income and product in a two-sector economy. There is no government. Since there is no government, no point of having taxes. And since there is no rest of the world, assuming that only one economy exists on earth, if there is no rest of the world, no point of studying exports or imports. Okay, so now we are in a position to make a diagram. Okay, so erasing all this off, let's now look at the diagram. So you can clearly see that circular flow of income and product, circular flow of income and product consists of two types of markets. So one market is called the product market. Product market, that is the market for goods and services. Product market involves market for goods and services. And then we have the factor market. Factor market, that is the market for the factors of production. Market for the factors of production, that is, what are the factors of production? Land, labor, capital, and entrepreneur. These are all the factors of production. So students, now we can draw the diagram. Let's draw the diagram now. Okay, so now you can see on your screens, we are going to draw a diagram. So we have the household sector. This is one sector we have. Okay, and then you can see that we have another sector, which is the firm sector. Another sector is my firms sector. Okay, so you can clearly see, first let's draw the factor market. So households are doing what? Households are supplying factor services to the firms. So I can draw an arrow like this. Households supply factor services. What are the factor services? All of us know. Factor services are land, labor, capital, entrepreneur. These are all factor services which are provided by household sector to the firm sector. And when households are supplying these factor services, what are firms doing? Firms are paying for these factor services. So I can draw a reverse line like this, from firms to households. What are firms doing? Firms are making the factor payments. Firms are making the factor payments to the households in the form of rent paid to land, wages paid to labor, interest paid on capital, and profits paid to the entrepreneur. So I hope all students have understood this circular flow. Factor services are provided by the households to the firms, so arrow in this direction, and firms are providing the factor payments to the households. Okay, firms are providing the factor payments to the households. So in this particular case, you can see the red arrows are going from the firms to the households. So this is my factor market. So I can write this is my factor market. So I can write it here. This transaction is my factor market. And you can clearly see within this factor market, what is the real flow? Real flow is nothing but the flow of factor services from the households to the firms, because they do not involve money. And what is the money flow? Money flow is the factor payments from firms to the households because they involve money. So I can write this is my money flow. This is my money flow. So I hope students have understood the real flow. The real flow in the factor market is from households to firms, where households provide factor services to the firms. Money flow is the flow from the firms to the households. Firms make factor payments to the households in the form of rent, wages, interest, and profits. So I can write it so that it's clear for all the students. This is nothing but my money flow. This is my money flow. So I hope students have understood this. And now, guys, we can look at the product market. So let's look at the product market. Who provides goods and services? Firms. So I can say, I can draw a black line from firms. So firms supply goods and services to the households. So I can write goods and services. Goods and services are produced by the firms and they are provided to the households. And what do households do? Households will pay for these goods and services. So I can draw an arrow from households to the firms going in this direction. So what are households doing? Households do consumption expenditure. By consumption expenditure, what do we mean? Consumption expenditure means that firms are paying, the households are paying the firms for the goods and services. Whatever goods and services households have bought from the firms, households are paying the firms for the goods and services. So this market is called the product market. So I can write in brackets, this flow is called the product market or the product flow. Now out of this, guys, what is the real flow and what is the money flow? So when the firms are providing goods and services to the households, no money is involved. So this is my real flow. And the payment for these goods and services are made by the households to the firms. These payments are made in dollars or in any currency. So consumption expenditure is nothing but my money flow. So this completes our diagram for the circular flow of income and product. I'm quickly revising with all the students once again so that all of you are crystal clear with the diagram. Okay, in the exam, it is very important that when a question comes on circular flow of income and product, you need to draw the diagram. Okay, so quickly revising with all the students, two sectors in the economy, household sector and the firm sector. Two types of markets, product market, factor market. Two types of flows, real flow and money flow. Let's look at all of them. Let's look at the factor market. Who supplies factor services? Households. So households supply factor services to the firms, which are land, labor, capital, and entrepreneur. Firms pay the households for these factor services. So firms pay rent to land, wages to labor, interest on capital, and profits to the entrepreneur. Now, what is the real flow? Real flow is nothing but the supply of factor services from households to firms because no money is involved. What is my money flow? The payment of factor services provided to the by the households. So basically, factor payments made by the firms to the households is the money flow. I repeat, factor payments in the form of rent, wages, interest, and profits made by the firms to the households is the money flow because now dollars are involved or any other currency is involved in this. Okay, so this is our factor market. Moving on to the product market. Who supplies goods and services? Firms. So firms supply goods and services to the households. Again, is there any money involved? No. So this is called the real flow. And when households buy goods and services from the firms, households will pay for these goods and services, which is called consumption expenditure. This goes from the households to the firms. It involves money because the households will make the payment in dollars or in any other currency. So this is called the money flow. And together they make the product market. So this diagram is called the circular flow of income and product in a two-sector economy. So I hope that all students have understood this diagram and have no doubts in this particular diagram. Okay, I hope it's clear to everyone. Okay, students, so let's move forward. After having drawn the diagram for circular flow of income and product, now we look at a very important concept within this particular topic, which is called leakages and injections to circular flow of income and product. So I'm erasing the initial part and now let's discuss what are the leakages or injections to the circular flow of income and product. So erasing all this. So our next heading now is leakages and injections. Leakages and injections to the circular, or I can say in leakages and injections in the circular flow of income and product. Leakages and injections in the circular flow of income and product. So guys, let's look at what are leakages and what are injections. So first, let's talk about what is meant by leakage. Okay, so let's discuss leakage. So leakage, that part of income which is not passed within the circular flow of income is called a leakage. Okay, so first of all, students should know what is the dictionary meaning of leakage. Anything which is going out of the process. Anything which is going out of the process is called a leakage. So when we talk about leakage in circular flow of income and product, what does it mean? That part of the income which is going out of the circular flow of income. Now, when I talk about circular flow of income, it is happening between only two sectors, households and firms. But that part of income which is going outside the household and the firm sector is called a leakage. Very simple. That means, guys, that part of income in the economy which is neither going to the household nor going to the firms is called a leakage. So I can say this means This means that leakage consists of that part of income which is produced in the economy, but neither goes to the households, nor to the firms. So can we now look at some examples of leakages? Which part of income is neither going to the households nor going to the firms? That means basically which part of income is not in circulation. So neither goes to the households nor to the firms, that is that income which is not in circulation. That income which is not in circulation between the households and the firms. So when I talk about leakage will include that part of income which is produced in the economy, but which is not within the circular flow of income. That means leakage will consist of that part of income which is not circulating between the households and the firms. It is outside this system. So examples would be, what are the examples, guys? First example, savings. Now in this model, we have assumed that households do not save, right? The assumption which we had made was that households will spend all their income on consumption, they will not save. But in the real life, all of us do save money, right? When we get our incomes, we spend some part of it and we save. Now when we are saving our income, is it getting circulated? You need to ask yourself, if I am saving my income with myself, it means I'm not spending it. If I'm not spending it, it is not getting circulated. So it is a leakage. So savings is a leakage because the amount by which the household is saving money is that income which is not in circulation. That money you have kept with yourself, you have removed that money from getting circulated. So it is a leakage. Second thing, second example, payment for imports. Now, if all students can recall, we had made an assumption that there is no rest of the world. That means in the beginning of the lecture, we had assumed that there is only one economy on earth, but this is unrealistic. In real life, we also have rest of the world. We have lot of economies in real life. We have foreigners. Okay. So when we are buying from the foreigners, we will be paying them. Now the amount which we pay them will go out of this circular flow. Now remember, guys, when I talk about circular flow, it is happening only between two parties, households and domestic firms. Domestic firms means firms within the economy. Now when I import some commodity from abroad, I will be making the payment to the foreigners. This means that this income is not getting circulated between the households and the domestic firms. It is going to the outsiders. So it is a leakage. You need to understand it very simply. any part of income which is not getting circulated between the households and the firms is a leakage. When you are saving money, it is not getting circulated between households and firms, it is a leakage. When you are making payment to the foreigners, it is not getting circulated between the households and the domestic firms, it is a leakage. And the third example, now we had assumed that there is no government, but in real life, economies do have governments. Some of them are mixed economies, some of them are socialist economies, communist economies. Okay, mixed economies are where we have the role of both the government and the market. Communist economies or socialist economies are where the role of the government is the only role. There is no market in such economies. We only have the government taking all decisions, all economic decisions. Okay, so when we pay taxes to the government, whatever income we earn, when we pay taxes to the government, that part of income is the amount by which we pay taxes is not getting circulated between the households and firms. Since the taxes which the households or the firms are paying to the government is not getting circulated between them, it is an leakage. So these are the three examples of leakage. These are the three examples of leakage. Savings. Why is savings a leakage? Because the amount by which you are saving money, okay, it is not going to the firms, it is not going in circulation, hence it is a leakage. When you are making the payments for imports, you are paying the foreigners or the outsiders. In this case, again, that much amount of money is not getting circulated between the households and the firms, hence it is a leakage. And when you are paying taxes to the government, whether you are a household or a firm, firms also pay taxes, households also pay taxes. The amount by which you are paying taxes to the government, that much amount of money is going out of circulation between the households and the firms. Hence, that is also a leakage. So I hope all students have understood the concept of leakage and the examples. Okay, I hope there are no doubts in this particular concept. Okay, so now let's talk about injections. After having understood the concept of leakage, now let's talk about the concept of injection. So I'm erasing the definition of leakage. Okay, I'm erasing the definition of leakage. I'm also erasing the examples of leakage now, hoping that all students have understood the concept of leakage. Let us now talk about the concept of injection. Now, injection is going to be exactly the opposite. Injection is exactly the opposite. So what is injection? So injection is an addition. It is an addition to the circular flow of income. It is an addition to the circular flow of income, which is not generated, within, which is not generated from the current income. It is not generated from the current income, but is coming up from outside the circular flow. It is coming up from outside the circular flow. So first of all, let's talk about it in layman terms. What is injection? When I say dictionary meaning, when you are injecting something, it means You are adding some foreign body into the domestic system. If you look at the dictionary meaning, injection means you are adding some foreign body into the domestic system. So if I apply this concept to economics and particularly to circular flow of income, injection means what? You are injecting additional income to the current flow of income. Between the household and the firms, income is flowing. But in addition to that, you are adding some income from outside. When you are adding some income from outside to the current flow of income, it is called an injection. Let's look at the examples. What will be the examples of injections? Investment. Who does the investment? Firms do the investment. And you can clearly see investment is done from where? Investment is done from savings only. All of us do save money. We put that money in the bank. What do banks do with our money? Or what do firms do with our money? Firms make investments. These investments made by the firms will create further income. And this income will be added to the current flow of income. That is why it's an injection. So I am again repeating it. Why is investment called an injection? First of all, you should know from where investment happens. Investment happens from savings only. For example, suppose I have earned $100 and out of $100, I have saved $20. Now these $20, I will keep this $20 with the bank in my account, savings account. What will banks do with this $20? Banks will make investment, and investment generates more income in the economy. If you're making investments, it will yield returns, it will generate income in the process. And this income is coming from outside the circular flow. Because when I talk about circular flow, it is happening only between the households and the firms. But investment is made by the firms, which is adding income to the existing flow of income. Hence, it is an injection. Okay, I hope students are convinced. Second particular example, payment for exports. Now, guys, just as we buy goods from foreigners, foreigners also buy goods from us. When foreigners buy goods from us, they will be paying us. Now, that is additional income coming in the economy, and that income is getting added to the existing flow of income in the economy. Hence, it is an injection. I repeat, just as we buy goods and services from the foreigners, foreigners also buy goods and services from us. When they are buying from us, they will be paying us. So that means we are receiving additional income which gets added to the current flow of income. Hence, it's an injection. And the last example of injection, government expenditure. Government expenditure. Now, just as we had taxes, taxes are paid by the firms or the households to the government. Now, what does government do with those taxes? The governments will build roads, bridges, buildings with the taxes we pay. The taxes which we pay to the government, what will the government do with those taxes? The government will build more roads, the government will build more bridges, more hospitals, more parks. That means the government does more expenditure. When the government does more expenditure, it will hire more people. For example, if the government wants to build a bridge, the government will hire more labor to build the bridge. That labor will be paid money. What is happening? Additional income is coming to the existing flow of income. And since additional income is coming to the existing flow of income, hence government expenditure is also an injection. So we have three examples of injection which you can see on your screens. Investment. Why is investment an injection? Because the amount of money saved by the households is used by the firms, or not necessarily the amount of savings. Firms also have their own retained earnings or their own profits which are further reinvested. So to keep it plain and simple, investment made by the firms is creating additional income which gets added to the current flow of income between the households and the firms. Hence, investment is an injection. Second point, not only we are buying from the foreigners, foreigners are also buying from us. Since they buy from us goods and services, they make payment for the goods and services. Again, this payment made by the foreigners is an additional income added to the current flow of income between the households and the firms. Hence, it is an injection. And the third example, the taxes which are paid by the households and the firms are used by the government to do expenditure on roads, bridges, railways, okay, public parks, hospitals. And when the government is doing this expenditure, that means if the government is doing this expenditure, the income in the economy is going up, because when the government builds these roads, bridges, and railways, the government will hire more labor. That labor will be paid income. So this is additional income added to the current flow of income between the households and the firms. Hence, government expenditure is also an injection. So this is where I intend to stop in this lecture of macroeconomics. Okay. What we have primarily covered in this lecture is one of the most important concepts of national income, which is the circular flow of income and product in a two-sector economy. So I hope all students have enjoyed this lecture. In the next lecture of macroeconomics, we will further discuss about what are the various type of goods, what is meant by a stock concept, flow concept, gross and net investment, the concept of depreciation. So some small concepts are left within this chapter, which we will be taking up for discussion in our next lecture of macroeconomics. So I stop here. I hope students have enjoyed this lecture. Any doubt, you can unmute your mics and ask, or you can call up, or you can mail me your doubts at divineschooloфeconomics@gmail.com. So this is where I stop in this lecture.